This week we have HBAR and other American crypto set up to be untaxed assets. We also have the specifics around the technical side of Layerzero. That's the up-only gaming platform that's coming out of Karate Combat. We also have Bonzo Finance and much more. Welcome back. I'm Brandon, the HBAR Bull, here once again to give you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So there's certainly the winds of change when it comes to the political landscape around crypto, and it comes from both sides of the aisle. We're going to start with something that presidential candidate Donald Trump said in an interview. As reported by Good Morning Crypto, he said, "They've been paying tax on crypto, and I don't think that's right. Bitcoin is money, and you have to pay capital gains tax if you use it to buy a coffee. I was talking with a friend, and he said it really shouldn't be taxed." Trump goes on to say no tax on crypto, but only on tokens made in the USA. We want tokens made here at home. Now, when Hedera was first kicking off and they were planning on launching HBAR, they were under a lot of pressure to push that offshore, to actually launch it from an entity that was offshore. They were adamant, the founders, Manson and Lehman, were adamant that it needed to be here in the United States and that eventually regulation would catch up. And it seems like that's happening. And if it actually comes to fruition where HBAR is not taxed and other assets like Ethereum that were launched offshore are taxed, it could really be a boost to HBAR and other American crypto assets. Now that brings me to another thing that was positive that came out this week, and it actually came out of the Harris and Biden administration. Actually, the Treasury Department, but of course that is under the executive branch. It was the Treasury presentation to TBAC, and TBAC stands for Treasury Borrowing Advisory Committee. In the report, they cover what stablecoins are and how they, along with crypto volatility, drives demand for U.S. Treasuries. The report also gets into broader tokenization of assets and the parallels between digital asset markets and traditional markets. They talk generally about the promise of tokenization of securities, but also specifically about tokenization of treasuries. So it's pretty clear at this point that the tokenization of traditional financial markets around the world is pretty much inevitable at this point. And this brings us to the newest Hedera Governing Council member that's coming out of Africa. It's the Nairobi Securities Exchange, or the NSE, the leading stock exchange in Kenya. Bill Miller, one of the co-chairs on the Hedera Governing Council's membership committee, said, "The Nairobi Securities Exchange brings unparalleled expertise and deep connections within the African market. As one of sub-Saharan Africa's largest economies, Kenya presents a significant opportunity for driving the adoption of digital assets and Hedera's technology. The NSE's diverse reach provides an excellent foundation for Hedera to underpin global capital markets with a market capitalization of approximately $12.65 billion, daily transaction volumes exceeding 100 million, and 63 listed companies and securities across 11 sectors." In addition, we had some comments from the CEO of NSE. He said, "We're delighted to join the Hedera Council that will empower the NSE to accelerate the launch and uptake of digital assets and the tokenization of securities to trade on the NSE. This initiative is in line with our new strategic priority of offering a world-class market infrastructure anchored on diverse and innovative financial products, leveraging on partnerships and collaborations. Tokenization has the potential to transform industries across Africa, and the NSE is committed to driving this innovation through the Hedera network, which is valued for its unmatched performance, security, and compliance standards. The NSE looks forward to collaborating closely with other council members to drive widespread adoption of tokenization across the continent and establish the NSE as an industry leader in the space on the global stage." And with that last statement, he's hitting on something that we've been talking about for a while, that you start off with smaller markets that are kind of a proof of concept for the next step. So you start with decentralized exchanges, DEXs, NFT exchanges, and then we moved over to more traditional markets like the Digital Commodities Exchange and another commodities exchange, Verto. And that's going to expand to new types of exchanges like what we're seeing with Cask Capital, trading fractionalized whiskey casks. And of course, the next step is even more established securities exchanges, and that's exactly what the NSE represents. And as they come out with their products that are built on top of Hedera, that's also going to serve as a proof of concept for even larger exchanges out there. So the FTSE, the Texas Stock Exchange, the New York Stock Exchange. So congratulations to Hedera and the NSE on this edition. So now we're going to move on to something that we've talked about the past couple of weeks, but we got some additional media coverage, and that was around SKUx and Mondelez. So let's take a look at that clip real quick.
Okay, now to the news. I promised I'd get to it. So the underpinning of this is blockchain technology, which both of you say in the release is transformational for both the consumer and the retail industry itself. What makes it transformational? What makes it such a great opportunity for the industry? Shang, I'll start with you.
We put a message on digital transformation as one of the top agenda in Mondelez next 3 to 5 years. So one of the key measurement we're putting in place is double our revenues, right, in 5 years from now. How do we do this, right? So it's a traditional way selling product in retail store or online. Is this the only way we do it? I don't think we can do it, right? There's another way and a vehicle when you go through it. So the digital promotion, right, digital marketing, and all of the digital consumer engagement process, how do we attracting those Gen Z consumer to be a more brand conscious and loyal, and expanding just buying product, right? It's also like a social program, like events, sports events, and music events. So all those things adding up to the potential we call a digital economy space. How we could define this digital economy space when you need new technology platform, and blockchain providing a essential technology capability and scalability to move us into the digital economy space. That's what we're looking at, the huge potential.
So Bobby, blockchain, distributed ledger, it's been a topic of conversation for a really long time, and it always comes back to use case and scale. How does this address both of those things?
I think that's a great point. So if you think about, the evolution of blockchain, right? And really a lot of the use cases started off with very crypto-focused cases, right? And I think that, that's some of the negativity, just to be fully transparent in this space, is that it's been very crypto-focused as opposed to actually utilizing the ledger for what the ledger is. It's a tracking and a traceability of transaction. And so when you think about global use cases like the one that we're talking about, the ability to provide unmatched transparency to the data that we are powering on behalf of partners, that is really where this becomes groundbreaking for retail. And I always take it back to the problem that you're solving, right? Yeah. There's so many projects in this space that really don't solve problems for real world customers. They just kind of talk about the promise of blockchain. We're seeing some of that in the AI hype cycle. By the way, right now, Shang and I were just at the UN speaking about this a few weeks ago. Blockchain's gone through a very similar hype curve as AI is going through right now. And so you've seen a lot of those projects fade away. And now you're starting to see projects come to prominence like ours and other great companies that are really focusing on the traceability and the transaction verification element, right? So when you think about what we're doing, we're taking a process, as Shang mentioned, that has very little data, very little transparency at all, like a physical check. We're digitizing that for a better consumer experience. We're tying that to an immediate, almost real-time payment that a consumer has the ability to redeem anywhere that payment's accepted, right? And we have all different types of payment capabilities within that transaction. And then we're tying that payment to an immutable ledger where we can actually verify third-party proof that a consumer has gotten those funds and redeemed those funds. And so that whole life cycle has got a lot of technical capabilities obviously built into it, but from a consumer experience perspective, they know they got a reward, they know that it's redeemable, they don't have to guess, they don't have to question. I think that's the piece of this that's so simple, but so impactful for the retail ecosystem at large.
So you can see how serious SKUx and Mondelez are around their collaboration and their use of Hedera. And I've been going back and forth with Bobby over this last week. As mentioned in my interview with Bobby last week, even though SKUx is starting with coupons and promotions, they are a payments company. There has been a lot of hand-wringing in the Hedera community around the Coupon Bureau going under new leadership and not being as focused on using Hedera. But SKUx actually being a payments facilitator is actually bypassing traditional coupons altogether. It looks like SKUx has much more potential, and the Coupon Bureau would actually be accelerated through SKUx. SKUx is the last mile payment standard and is redeemable anywhere Visa or MasterCard are accepted, so pretty much everywhere. And obviously that means they have global reach. Now, SKUx and Mondelez are just starting to hit the Hedera mainnet, and it's going to be really exciting to see them scale over time. And you can tell that Bobby is an absolute pro at those interviews, so I can't wait to get him on here again. We're going to stick with payments, or more specifically, we're going to stick to stablecoins. We're going to get into something that Hedera has historically struggled with. And actually, we've seen the liquidity on Hedera drop off a bit as far as USDC just this past week. And hopefully this next guest is Chase. He's the head of product at Brale, is going to start to be able to address some of these things. So let's check that one out. Chase, welcome. Thanks for hopping on.
Awesome. Thanks for having me.
It's my pleasure. So we're going to jump right into these questions. First, can you just explain your business and the Brale platform?
Yeah, so I lead product at Brale. Brale is a stablecoin issuer. We have a stablecoin as a service product that helps businesses and protocols create their own stablecoins and then earn the underlying treasury revenue backing the stablecoin.
Oh, okay. Well, simple enough. Do you work with USDC or any other stablecoins we might be familiar with?
Yeah, so essentially we help businesses create their own stablecoins that look like a USDC, but unlike something like a USDC or USDT, businesses then earn the underlying treasury revenue behind the stablecoin. So it's really like a new monetization source for these stablecoins. We do also support USDC, and so we do stablecoin swaps. And so, for example, like we also do on and off ramps with USDC, and you can also swap USDC, back and forth between your own stablecoin.
That's perfect. So why did you decide to add support for Hedera, and what services exactly are you going to bring to our ecosystem?
Yeah, so I think Hedera makes a ton of sense for stablecoins and for payments, right? High TPS, low fees, some of the compliance flags on Hedera, and obviously there's an institutional base and kind of an enterprise base on Hedera that really makes sense for this. And so we're launching issuance on Hedera, so the ability to issue new stablecoins, and then also stablecoin on and off ramps in the US. And so we're going to support free on and off ramps for USDC and for Brale issued stablecoins.
I mean, this is music to our ears because one of the major issues for Hedera has been USDC stablecoin on and off ramps. So, individuals and businesses can more seamlessly flow between their regular finances and the HBAR economy. So how exactly can you do a little bit more of a deeper dive into how exactly this is going to be improved and when we might actually see that improvement?
Yeah, so I think a lot of what we're trying to do is just make it easier for people to access and to use stablecoins. And so on Hedera, essentially we have a Brale account that's very similar to a Circle Mint account, if you're familiar with that. And so what we're going to launch initially is the business accounts. And so any business in the US can essentially sign up for Brale for free, provide a little bit of information, and then they can on-ramp to USDC or their own stablecoin on Hedera through ACH, wire transfer, or stablecoin swaps. And then same thing on the off-ramp side. So that's what we're going to be launching this week or next week. And then around the end of the year, we'll have a retail ramp. So really the retail version of this flow. So any US consumer would be able to KYC and then do a bank transfer to get USDC or a Brale issued stablecoin on Hedera 100% for free.
And how about reversing that? So the USDC that's already in the HBAR economy, can they get that out and get that transferred into their bank account?
Yep, for sure. Same thing. So just link your bank account, like KYC, link your bank account with Plaid, and then we'll off ramp the USDC to your bank account.
This is exactly what we want to hear. So the first thing, since you're going to be working with businesses, it's pretty much a call to businesses that are building within the Hedera ecosystem to contact you guys and set up those accounts.
Yep, definitely. And again, it's 100% free. We're trying to reduce access here. So completely free to join Hedera, get an account, and then start on and off ramping.
Perfect. So, before we let you go, you've already been thorough. You were pretty succinct in your answers, but you gave us all the information we actually needed. So before we let you go, is there anything else that we missed that you'd like to cover?
I'll just say I'm really excited to support Hedera. I think some of the features of the network are really, really well suited to payments. And so as you look at what's happening in stablecoins today, cross-border payments, corporate treasury, all these kind of things that we're seeing, again, I think there's sort of attributes of the network. I think if we can increase access here, I'm really excited to see a lot more of these use cases move to Hedera.
Perfect. That's exactly what we want to hear. Last, how should they contact you? What's the best way of going about that?
We have a contact page on our website. If you want to schedule the time with the team, you can also just sign up directly on the site. And then obviously Twitter, Brale _XYZ or LinkedIn.
Perfect. All right. So Chase, thanks for hopping on today and running us through all that stuff, and good luck.
Awesome. Thanks, Brandon.
Now, a huge hat tip to Greg Bell for bringing them online. The general strategy for the HBAR Foundation around stablecoins need a lot of improvement, so I'm hoping to see more of this kind of stuff as we move forward. The next thing we're going to touch on is another one of the Hedera Governing Council members, Chainlink, and the HBAR Foundation joining Chainlink Scale. Now, right now, this is just on testnet, but hopefully it's going to be moving to mainnet before too long. And of course, the big thing around this is that it gives Hedera and Hedera builders access to a broad range of Chainlink oracles, which is critical across countless use cases. And one of those verticals that is really important to have great oracles is DeFi. We're going to get into a couple teams that are building in the Hedera space around DeFi, and the first one's going to be Headstarter. Headstarter provides services for Hedera token issuers and has their own token to support their project's HST, and just yesterday they launched their staking product. In their post, they said single-sided HST staking is now live. The future starts now. Stake HST today to enjoy generous APY rewards, compounded and boosted by NFTs, and earn moon rocks. And you can find this at app.headstarter.org/staking. They say level up your Hedera HST strategy and join the circular economy based on real yield. And Headstarter has some really innovative stuff going on, so I'm going to get a hold of one of their co-founders, Tudor, next week to give us some more details. Another big launch that happened this week was Bonzo Finance, one of the first lending and borrowing platforms on Hedera. So we got their co-founder, Brady, to give us some more information on that one. Brady, welcome back and congratulations. It looks like the launch of your lending platform went really well. I've seen some impressive metrics, but from your point of view, how's it going?
Yeah, thanks so much. Super excited. The entire team at Bonzo Finance Labs is pretty elated with how the launch went yesterday. The most important metric that we're focusing on is total value locked. There's a few other key metrics that are really important that are top line, like stablecoin liquidity and borrows or utilization. But TVL is really such a core focus for pretty much any DeFi protocol at this point across the Web3 space. And we smashed through $1 million in TVL of Hedera ecosystem assets within just like the first couple hours of launching. And then now, as of this morning, we're sitting at like 1.71 million. We don't have borrowing enabled yet either. So this is just sort of people who are supplying assets, not using them as collateral to borrow against, and just getting ready for borrowing to be enabled. But I think we're going to be enabling borrowing faster than we anticipated based on the liquidity thresholds that are being met.
All right. Well, like you said, you don't have everything integrated yet, but do you mind kind of walking us through and just showing us how to go through the process of supplying liquidity? And I don't know if you have any tests and you can show us anything further, but you're more than welcome to share your screen.
Yeah, absolutely. All right, so this is the Bonzo Finance dashboard, and there's a few things that are going on here. So what I'm going to do is walk everybody through this from top to bottom. So up at the top, you can connect your Hedera account. Right now, we support Hashpack, but we are looking to support Kabila, Blade, MetaMask, and all of that through sort of the Wallet Connect integration that's been created by the ecosystem. To the left of that, you're going to see an option here that shows points. So we are running a points program on Bonzo Finance. Essentially, points programs run in seasons. And within each season, when you supply assets or borrow assets, you're earning Bonzo points. And those points are used to inform claimable Bonzo at the end of each season after the token generation event takes place. So we haven't hit 24 hours yet since launch. So my season 1 points are still sitting at 0, but you can see that I'm earning 1,320 points per day. And if you have a Bonzo NFT collectible in the account that you've connected, you do earn a multiplier on those points. So it's 1.1x, 1.2x, 1.3x, and 1.5x, depending on which tier of collectible you're holding. Up at the top here, this describes the number of points earned per $1 value supplied every 24 hours. And again, points are used to inform sort of claimable Bonzo at the end of each of the points season. Today, we only have lending or supplying available. We're looking to achieve a minimum threshold of liquidity before enabling borrowing, just to ensure that it's the safest experience possible for users. So once borrowing is enabled, you'll actually earn more points for borrowing than you do for supplying. And details on that are going to be made very available on Discord and on X as well. So at the top here, what you see is my borrow power. And borrow power is essentially the amount of value that I can, when borrowing is enabled, borrow of any of these supported assets in the protocol today. Borrow power is based on essentially a percentage of any of the assets that I've supplied. So I've supplied here $17 in sauce, $312 of HST from Headstarter. I have 3 cents of karate in here as well. I was mostly just doing this for testing. Each of these, based on their risk, gives you what's called a loan to value ratio. So based on the collateral and the value of the collateral that you've supplied, you can borrow up to a certain percentage of it safely. And that's configured by the protocol. And again, it's based on the risk of each of the assets that are supported by the protocol. So that is borrow power. Health factor and liquidation LTV. These metrics are really there for when borrowing becomes enabled. Health factor, the most important thing that you're going to be looking at is you do not want your health factor to drop below 1. As you continue to borrow assets against your collateral, your health factor drops. Right now, because I don't have anything borrowed, it's sitting at max. It's a maximum amount of health for my positions. And then liquidation LTV is essentially at what percentage of the value that I'm borrowing against my collateral could result in a liquidation. And as prices for your collateral end up, potentially dropping, you become closer to your liquidation LTV. Essentially, the assets that you are borrowing might be worth more than the assets that you have supplied as collateral to back that loan. And so it's really important to be monitoring essentially your health factor, and then also essentially the prices of the assets that you're borrowing and the price of the collateral that you've supplied. As we scroll down here, we've got a supplied assets bucket and a borrowed assets bucket. So again, I've supplied sauce, karate, and HST here. These are the dollar values and the token amounts that I've supplied. And then there's an APY rate. So today, because borrowing is not enabled, the organic APY rate is sitting at 0%. The APY rates can be earned for supplying assets are variable, and they're based on the utilization of the asset or the amount that's being borrowed of the asset. So a bunch of people are supplying assets to a pool like sauce, and then there are people on the other side of the market who are borrowing the sauce token. And as more people borrow the sauce token, as more value is being borrowed, they're paying interest, which ends up going to the people who have supplied that sauce asset. And so that's reflected in this organic APY. You'll notice that there's a little sparkle box that's down here. What we've enabled is additional liquidity incentives that go beyond this organic APY. And we've partnered with various token-based projects across Hedera, which we're super thankful of their partnership, but they've provided liquidity incentives that are used to support the supplying of liquidity by token holders to the protocol. So for karate, they passed a governance proposal that granted Bonzo 20 million karate tokens to use as liquidity incentives. And those are being utilized via smart contract to provide essentially a supplemental APY. So if you supply karate right now, that APY is sitting at around 7.19%.
Is that rate going to go down based off of the additional karate that's allocated, or is that a set amount for a certain amount of time?
Yeah, so as more karate is supplied to the pool, the APY rate drops, similar to like an APY rate for like DEXs. What there is some configuration over is the usage of the 20 million karate that were provided as liquidity incentives. And so over time, the amount that is emitted will increase as the TVL increases. So ultimately, attempting to try and achieve a pretty consistent APY over a period of 6 months and then 12 months, essentially trying to utilize those liquidity incentives as best as possible to ensure the most sufficient liquidity while also rewarding users.
The next thing that I want to ask is, what are some of the strategies that could be used for USDC, for Karate, and so forth?
Yeah, so we did put out a sort of protocol agnostic blog posting that talks about the various strategies that are seen across all of Web3 for lending protocols. And, when you think of decentralized lending and borrowing, obviously in the name, you go, okay, well, I can lend and I can borrow assets. There's so much more that can be done with lending and borrowing protocols that go beyond just lending and borrowing. One of the most simple ones is probably being able to long or short tokens in the ecosystem. So for longing and shorting, that's one of the examples of these strategies that you can employ with lending protocols. So for longing, for example, let's say you think that the Karate asset is going to go up in price. What you could do is collateralize Karate. So essentially you supply it as collateral. You borrow US dollar, USDC stablecoin. You go to a decentralized exchange, you swap USDC for Karate, and now you're sitting on essentially what is like a leveraged Karate position. And then after the Karate asset goes up, as you hope it does, you can swap back into the stablecoin that you borrowed and repay the loan, and then keep the profits that you made sort of from that transaction. Another one is shorting an asset. So in order to short an asset, what you can do is supply any collateral that you wish. You can borrow the asset that you think is going to drop in price, take that asset to a centralized or decentralized exchange, swap it for a stable coin, hold the stable coin until that price drop that you anticipate takes place, and then swap the USDC back for the asset that was borrowed and repay the loan, and then again keep any profits that were earned. So longing and shorting is one example strategy that we're seeing across the lending and borrowing space in Web3. There's a number of other strategies as well. There's again a blog posting that we wrote called I think it's the DGen's Guide to Lending and Borrowing, and it goes through a number of examples. And just want to be clear too, not financial advice in any way, really just looking to sort of educate the ecosystem in an agnostic way on how people are utilizing lending and borrowing protocols across the space.
Sure. And, if you wanted to supply liquidity and you're just holding HBAR, for example, you could supply that HBAR as collateral. Then you could borrow USDC and then pair it with some other HBAR that you have on a decentralized exchange like SaucerSwap. Or you could borrow Karate and then use that to participate in up-only gaming. I think there's going to be a fair amount of people that are going to try that one out here in the next event, which I think is just coming up in a couple weeks.
Oh, yeah, absolutely. Yeah, there's a whole range of different strategies, and like token utilization is a big one. Essentially, you're sitting on a bunch of HBAR, like you said, you borrow an asset that has utility within its application like Karate, and then being able to use it for, whatever the intended purpose is of that asset within its application.
Perfect. So those are the benefits, of course, of lending and borrowing. Can you kind of touch a little bit on the risks and things that people need to be careful about when they're participating in Bonzo?
Yeah, so number one, and this is with any DeFi protocol, is smart contract risk. Audits have been done on all of the contracts for Bonzo Finance via Halborn, and those reports are available in our documentation and on our website. But smart contract risk is always a huge risk. It is code at the end of the day, and people can get quite tricky in trying to figure out how to hack and extract value out of that. So we do everything we can to ensure the safety of contracts and the experience, but that's definitely a risk. And then when you start to play around with borrowing, the risk is around potentially getting liquidated. So when you supply assets as collateral and you borrow against that collateral, you do have to be aware of the price movements of the asset that's being supplied, just to ensure that you're not hitting your liquidation threshold. If the price of an asset drops pretty dramatically and you've supplied it as collateral and you're borrowing against it, there is the possibility of liquidations. When we first enable borrowing, there is going to be a significant amount of padding for users. So in the sense that asset prices would have to drop pretty dramatically in order for liquidation to take place. The downside of that is that you can only borrow a smaller percentage against the value of the collateral that you've supplied. Over time, we'll lift those thresholds to be more akin to maybe the rest of the ecosystem. We also have a risk analysis partner that we're going to be working with that essentially takes in data from the Hedera ecosystem, such as like saucer swap liquidity pools, external macroeconomic factors, as well as counterparties like the Oracle provider Supra that we're using, and using that data to help inform exactly the risk parameters that need to be set on a per asset basis, again, to ensure just the most safety for users. And let's see, I'd say the biggest risk parameter for that is the sort of loan to value ratio. Again, essentially like how much value you can borrow against the value that you've supplied. And that changes on a per asset basis.
So where does the risk lie for those that are supplying the assets?
Yeah, so uniquely with lending protocols, when you supply an asset, you're supplying it into a single asset pool. So with decentralized exchanges, you actually have to do a token pair. So you're pairing two tokens together, you're depositing it as liquidity. And depending on the price movements of both of those assets that are paired together, if they diverge, there is the chance for impermanent loss. With decentralized lending protocols and Bonzo Finance, each of the asset pools are single asset pools. So you can deposit any asset, there's no risk of impermanent loss. And if you're not borrowing against it, then really the biggest risk that you're facing is just around smart contract risk.
Is there any way that an asset could drop so rapidly that they really can't fill the requirement for paying back the loan, essentially, using their collateral?
Yeah, if there's the chance of an asset that just absolutely tanks, it could be so fast that it's really difficult to supply enough collateral again to ensure that you aren't liquidated. It is why monitoring your positions is incredibly important. And we do have some features coming out down the line that allow for notification to users when assets or collateral that you've supplied starts to be within a threshold of potential liquidation. So it would notify you, and you could come in and update your positions in whichever way you see most fit. There's also automations that can be done too. So if you are a developer, you can set up automations so that it automatically maybe supplies more collateral to your position if you are within risk of getting liquidated. There's some tools across Web3 that make it really easy for folks to do that without having a developer background. It is something that we're researching and wanting to get integrated into. I think it's just such a valuable feature. It's something that I would want to use if I'm using Bonzo Finance or lending and borrowing in general. So, definitely excited for the future when it comes to these different types of features that also help protect users.
All right, good stuff. Now, I know that you're paying attention to the Hedera DeFi landscape all the time. What's your outlook for the HBAR economy going into 2025?
I'm incredibly excited about the HBAR economy. I think lending and borrowing, honestly, is going to be a staple functionality for the ecosystem. When you look at any other ecosystem across Web3, any other network, when lending and borrowing comes online, you typically end up seeing a huge increase in metrics related to other protocols in the ecosystem. So lending and borrowing should help support total value locked in saucer swap, for example. Like one of the examples that you cited earlier was around borrowing assets to place into liquidity pools on saucer swap to earn a reward. That overall boosts TVL for saucer swap or any other decentralized exchange on Hedera, as well as just the overall TVL for Hedera. And then the other thing that I'm really excited about is bridges. Recently announced by HBAR Foundation was Axelar and Layerzero cross-chain messaging. Those cross-chain messaging protocols enable asset bridges that are going to come online that allow for the siphoning of liquidity from other networks into Hedera. And, we've had Hashport for a bit. Hashport's been really amazing. I think most of the utilization of Hashport has been a lot of Hedera users. It's a bit more isolated from the rest of Web3. Axelar and Layerzero are pretty ubiquitous across the space, and the bridges that use Axelar and Layerzero are well known by users of many other networks. And so when you enable this bridging functionality combined with incentives in DeFi protocols, you create motivation for net new users to come to Hedera and for liquidity to be brought into Hedera. And on X, I'm scrolling through and I constantly see these maps showing the liquidity being moved from one network to another. Recently the big one was Sui. They've been siphoning a lot of liquidity from Ethereum and I think Solana as well. Base had that sort of same situation. So, I really hope to see the whole ecosystem align around this, because it's not just like a build it and they will come with regards to bridges. It's a very cohesive effort across the entire ecosystem to ensure everything is in place to make it a suitable environment to bring in net new users and net new liquidity. And then one more thing on that as well is having the most ubiquitous assets across Web3 in Hedera with sufficient liquidity ensures that users don't have to go to another network to get exposure to these other assets. So, today, if you're a user on Hedera and you want to trade a decent amount of Ethereum, for example, you've got to go to Arbitrum Base, Ethereum, Solana, whatever, because they've got either the native version of Ethereum on Ethereum or wrapped versions of Ethereum with sufficient liquidity. If that was the case on Hedera, it creates stickiness because users don't have to leave the Hedera network to go get exposure to these other assets or to use protocols that offer, unique functionalities. We can have all of that at home on Hedera and create greater retention. So, a lot of different things that are coming online that I think are going to help support the crypto economy on Hedera, and I'm super excited about it.
Really well covered. Now, what's next for Bonzo? What do we have to look forward to in the weeks and months to come?
Yeah, so our relentless focus is on attracting as much liquidity as possible to the protocol. And then once borrowing becomes enabled, just ensuring that we're educating users on why borrow and how to borrow and what types of strategies and other things exist for that. We're going to take a very agnostic approach. Obviously, we don't want to give financial advice in any way, but we want to just give users the education that they need. I think SaucerSwap did an amazing job when they first started educating users on all of the functionalities that DEXs provide. And we want to sort of take a page from their playbook on the education front. New features. So like I said, bridge integrations directly within the UI, I think is really important. Folks shouldn't have to leave the experience, if they're coming from another network, to be able to bring assets into Bonzo Finance and supporting those assets in the protocol. Functionalities like the notification system. Analytics is a really big one too. So having sort of a global analytics page as well as individual asset analytics, and then network expansion is a big one as well. So we are looking to very quickly expand to other networks, layer 1 and layer 2 networks that also are experiencing a gap in their DeFi ecosystem similar to Hedera. Maybe they have a decentralized exchange and some sufficient liquidity, and there really is some differentiation and long-term viability of the network that's been identified. And they're missing a lending protocol. Well, that's a great opportunity for us to be able to expand to them. The two networks that we are looking at right now is Supra is the Oracle provider for Bonzo, but they're also launching an EVM layer 1 network early next year. So we're exploring that with them, and they've been an amazing partner to work with. And then obviously Up Only Gaming, they've got a layer 2 network that's being built on Hedera, and they're going to have to build out their entire ecosystem. Oracle's decentralized exchanges, lending protocols, and then obviously all of these leagues that I think there's 30 plus leagues that are looking to jump onto this layer 2 network and sort of replicate some of the similarities of what we've seen with Karate Combat. So very excited about that too. And all of this within, the next year.
Well, I'm going to be talking to Ethan. He's the lead dev over there at Up Layer 2, so I'll try to get some more answers around that. Again, Brady, congratulations, and thanks for bringing these products to market.
Absolutely. Thanks so much, Brandon. Good chatting with you.
So as Brady mentioned in there, other networks and interoperability is going to be critical for Hedera to grow. And we got some more news last week. I actually missed it in last week's show, but I wanted to circle back and catch some of that information. And this is around Layerzero, another interoperability platform to join Axelar and Hashport. In the HBAR Foundation post, they highlight some of the Hedera network benefits from this integration. They say Layerzero's omni-chain fungible token standard provides asset-level interoperability for ERC assets on the Hedera network, a key challenge and priority for real-world asset issuance and adoption. Hedera-based dApps can now directly integrate the Layerzero Hedera endpoint, providing a seamless bridge experience in-app and opening up new opportunities to introduce new users to the Hedera ecosystem. The Hedera endpoint also lays the groundwork for Hedera-based assets to be supported on Stargate, the fully composable liquidity transport protocol built on top of Layerzero. In the coming weeks, the HBAR Foundation will present a governance proposal to the Stargate DAO to add native support for the Hedera version of USDC. And from Layerzero to up layer 2, I caught up with Ethan. Ethan is the CTO at Karate Combat. He's also the lead developer for up layer 2, which is the up-only gaming layer 2 that's built on top of Hedera that is going to move that up-only gaming concept from just Karate Combat to dozens of other leagues out there. I needed to get the inside track on the technical aspects of up layer 2 just so I and the rest of the Hedera community could really wrap our heads around how this is all going to impact the Hedera network. So let's catch up with Ethan real quick. Ethan, welcome. Thanks for giving us some time today.
Thanks for having me.
So I want to dig into up layer 2. We had only LARPing on a couple weeks ago, and he gave us kind of the 10,000 foot view, but I do want to get into some of the technical aspects of what's going on there. But before we get into that, can you kind of tell us what you do at Karate Combat and what you are going to be doing here at up layer 2?
Yeah, sure. So I'm the CTO of Karate Combat. I've held that position for the last 3 years there when we first sold the league to a foundation in order to implement this community-driven token structure. And yeah, for Up, I'll continue that role there. And yeah, we're excited about it.
All right. So you're leading kind of the development of this up layer 2.
Yeah, that's right.
Okay, I gotcha. So to get into up layer 2, can you run us through the architecture of this layer 2 on Hedera and how it works?
Yeah, sure. So what we're envisioning or what we're working on right now is a ZK rollup on Hedera. So that's a very new technology. In the past, you have optimistic rollups and things like that. But in 2019, a kind of seminal paper came out by Gabzon and Williamson, which kind of made it possible to have these cheap transactions or cheap zero knowledge proofs happen on Hedera or any L1, which would allow these cheaper transactions and kind of maintain these security guarantees. So that's exactly what we'll be implementing on Hedera. And do you want me to get into the architecture on the different components?
Sure. Get into it a little bit. We don't have to go too deep, but
instead of a 10,000 foot view, bring us down to a few hundred feet.
Okay, yeah, I'll try to be informative. So the flow works with first using an HCS transaction, Hedera Token Service transaction, onto the smart contract, and that smart contract kind of holds the entire state of the ZK rollup. So every time a transaction takes place on the L1 or L2, you send either the ZK proof or a traditional L1 transaction that allows it to be integrated into the ZK rollup. So the way that works for Up is that you'll be able to say, okay, I want to request to deposit my Hedera token onto Up, and that'll send a message to the L2 network. And then the L2 network will say, okay, we have a message request. And then it'll create a ZK proof of a deposit being created of that message request or that transaction. It'll send it back to the smart contract service, and then it'll include a zero knowledge proof, which will confirm that one, that Hedera token was deposited on that smart contract, and then two, that the L2 network actually made that deposit.
All right, so when you say the network, is there going to be validators involved, or is this all going to be handled with smart contracts on Hedera?
Yeah, so all the verification does happen on the smart contract, including data availability. So both of those things happen on the smart contract layer. The only thing that happens on the L2 network is one, creating the proofs, which will be verified on the smart contract, and then two, sequencing the various transactions. So the way it typically works for a lot of these ZK rollup strategies is that you, one, have to sequence all these transactions saying, okay, this is the order in which they took place. And then second, you create a proof of each individual transaction, and then you create an aggregate proof across all those transactions. And then you send that aggregate onto the L1. And then the L1 determines whether or not that zero knowledge proof and that data was actually correct.
So, Ethan, on Hedera, smart contract calls are relatively expensive compared to token transfers. So, a smart contract call is 5 cents compared to like an HTS token transfer is a tenth of a cent. How are you actually making this more efficient and cheaper by using this architecture and this structure?
Yeah, so with ZK rollups, we actually batch all these transactions. So while normally you have this 3-second finality and you have this small limitation on the amount of transactions you can happen, we kind of 1000x that, where every 30 milliseconds we have maybe 400 transactions, and then every second or every 3 seconds we'll have 1000 transactions that are submitted to the chain, and that amortizes the total gas cost across each of those transactions. So it makes it much, much cheaper.
Okay, and what about finality and the time it takes to make these transactions compared to the normal Hedera 3 seconds? It's pretty darn fast right now.
Yeah, no, obviously it's probably the best in state of the art. But in terms of a ZK rollup, you can get these 30-second or 30 millisecond finalities. So within the L2, you have these 30 millisecond times, which is comparable to even a Web 2 experience. And that's kind of the goal. With this, you don't really have to worry about the user having HBAR or giving the user HBAR to onboard them. Instead, you can use something even like Paymaster, and you can natively convert their native token to HBAR behind the scenes and pay for the settlement costs that way. And that really allows you to, one, get those quick latencies, and then two, also batch these transactions in a seamless manner.
Okay, that makes a lot more sense. And even though you might be batching up to 1,000 transactions per smart contract call, that's getting it down to about 1/200th of a cent. You're not always going to be able to fill up every single one of those calls. So at times it might be a little bit more expensive, but still pretty darn cheap.
Yeah, that's right. There's going to be a variance in the actual gas costs, but yeah, it'll remain cheap. And yeah, we're happy to just make it a way where we can deliver this Web 2 experience.
All right, understood.
But I want to get into some of the other aspects of it, including the UP token. How do you envision the UP token working into the rest of this?
Yeah, so the UP token is primarily a governance token. Ideally, you'll be able to kind of access these other leagues that'll be on the L2 and maybe any of these other loyalty rewards that'll be available. Because that's the ultimate abstraction of this, is where if you are a big fan of Karate Combat, if you're a big fan of maybe IFC or BattleBots or some other league, you can kind of say, okay, I'm a big fan. Let me get these in real experiences, and then even kind of swap for other experiences. So you can say, okay, I have enough tokens to get an experience with BattleBots, but I don't want to go to that event today. Let me just swap that for a Karate Combat pit side ticket.
Okay, that makes some sense. Now, can you expand a little bit more into how this token is going to be used for governance? So in the case of Karate Combat, we're talking about rule changes, and we're talking about,
Right.
rolling tokens over for certain things. What kind of other governance aspects of the Up Layer 2 platform is going to be handled by this token?
Yeah, so the main aspect of it is protocol upgrades. So anytime there's a protocol upgrade that has to be done, the token holders vote for that. And then secondly, Treasury. So Treasury basically decides what grants the L2 wants to give to kind of enrich the L2.
Okay, that makes perfect sense. Now, the tokens that are built on top of this platform, will they be able to leverage the HBAR economy like Hedera wallets, DEXs, and lending and borrowing platforms and so forth?
Yeah, so we're working with Bonzo and a few of these other large DeFi protocols that already exist on Hedera in order to kind of reuse that same technology.
Mm-hmm.
So in the first iteration, it's kind of a Ersatz copy of what they built on Hedera on the L2, but in later iterations, you have something called bridge and call. So from the layer 1, from the layer 2, I mean, you can use a zero knowledge proof to seamlessly interact with these other DeFi protocols that exist on the L1.
Okay, I got you. Now, we've covered a fair amount of it, but is there anything else you think we need to cover before we let you go?
Yeah, I mean, we're looking for more projects that want to build on the Up network, and yeah, more people onboarding onto it. We're really excited about it, and there's some cool advantages of using the L2. You can create the Hedera account in the background, so when they withdraw, it's already ready, and it kind of alleviates any of those account creation transaction limits that are imposed while maintaining that same security that Hedera provides.
All right, so it's pretty much a call to anybody running a sports league or something that's competitive, or anybody that knows about a sports league or can make those kind of contacts to get in touch with you guys and see if you want to bring up-only gaming to their sports.
Yeah, you get all our users and you get all our technology for free. You just have to use the L2.
Perfect. All right, Ethan. Well, thanks for jumping on today and giving us a little bit of time, and we're looking forward to UpLayer 2.
Yeah, I'm excited. Thanks for having me.
Now, it sounds like most of UpLayer 2 is going to be rolling out in Q1 of next year, but in the meantime, we have plenty going on with Karate Combat. We have at least 2 more events before the end of the year. I know we have a kickback coming up in just a couple weeks, so you're going to be able to participate in up-only gaming for that. And then in December, we have Karate Combat 51. So we're going to get plenty of up-only gaming here in the next couple months. And now we're going to jump into our ReFi space. There was a cryptic message coming from Envision Blockchain founder Daniel Norkin. Envision Blockchain is the creator of the Guardian standard that underpins Hedera's ReFi efforts, and he said something big's coming on November 7th. So we'll see what comes from that next week. We also had a new conservation use case on Hedera that was announced from a team called the 5W Foundation. We've had some other conservation efforts that have leveraged Hedera, and I actually see how they could work really well with our gaming ecosystem, so I hope this one has some legs. And before we get into network analysis, we have another announcement from Earthlings. They have their city plot mint that's going to be coming out. Now, besides a small grant for their Steam Runner game, they have completely bootstrapped everything they've done to this point. And they've done that with support from the Hedera community on these NFT mints. They already have a fantastic playable game that we're going to get into a lot deeper next week that are already using some of these NFTs. Now, I am one of their advisors. That's because I wanted to be involved with what I see as one of the most talented and best teams in the Hedera space. And they continue to execute light years ahead of where their shoestring budget would suggest. So I'm going to get their team on next week to give us the latest around what's coming down the line for Earthlings. And with that, let's get into a quick network analysis. Network throughput is still in the single-digit TPS, with some spikes up to a few dozen. We did have some solid account creation last week with over 64,000 created. There was also 244,000 NFT transfers and 22,000 fungible token transfers in the past 7 days. Looking at Hedera DeFi, the TVL on Hedera dropped to just over $44 million due to the drop in token prices, but Bonzo continues to do well with nearly $3 million locked up. Saucer Swap is at $38 million, HeliSwap at $1.4 million, and HSuite at $2.2 million. HSuite also announced they're getting closer to adding non-team run community smart nodes, so it's good to see them progressing on their roadmap. Moving over to the HBAR and crypto markets, Bitcoin had a strong week despite risk assets struggling, and Bitcoin is up 4% on the week and down only slightly on the day, holding between $69,000 and $70,000. HBAR continues to struggle, down nearly 7% on the week, and is currently testing support at 4.6 cents. It's not surprising to see significant underperformance to Bitcoin at this phase in the cycle, which is very similar to what we saw in 2020. Utility tokens have also been generally lagging, but the crypto market moves in phases, and I'm confident that utility tokens, including HBAR, will have their time to shine. At this point, I think it's all eyes on the US elections, which I think will have a significant impact on the crypto markets, in my opinion. Next week should be a pretty busy one. I already have interviews set up with Earthlings, Headstarter, and Kabila. I have a few other ones that are cooking in the oven, but I haven't nailed those down quite yet. I'm also probably going to get Rob on for Shark Bites, so if you have any questions for Rob, make sure to drop those down in the comments. And do me a favor, like this video, subscribe to my channel, and if you're curious about anything that's going on in the Hedera ecosystem, you can go to my channel and search the Built on Hedera series. You can put in things like RWA or teams like Neuron, and you're probably going to get a hit. That's all we have. We'll see you next week.